Now, cryptocurrencies have been on a dramatic downward tear in recent weeks and months. Here to tell me more about what's going on is Morningstar Investment Management's global CIO, Dan Kemp. Dan, what exactly is driving this downward trend? What's going on?
Well, hello, Ollie. Yes, it has been dramatic, as you say. So Bitcoin, which is probably the cryptocurrency people are most familiar with, is down over 50% over the last 6 months, which is a huge fall. Obviously, that seems to be accelerating over the last few weeks. And what seems to be driving this is just a change in sentiment, that when an asset like cryptocurrency, which doesn't have any intrinsic value, doesn't deliver any cash flows, when that sentiment turns, then the previously fashionable can become very unfashionable very quickly, and then we can see these sharp falls in prices. Now, people will equate it to what's happening in technology stocks, to interest rates, and inflation, and lots of other things. But I think at the heart of it, it's just a change in sentiment. That's why sentiment-driven investment can be so dangerous for investors.
Sure. Have we been here before? I mean, we've seen ups and downs, but how does this compare?
We have seen these ups and downs before, and yes, you're right. There's been times in the past where cryptocurrencies have come in and out of favor, and we've seen these sharp rises and falls. And so there'll undoubtedly be people saying, well, it's just another bout of volatility, that cryptocurrency is cheaper now than it was, and so it's a kind of good opportunity. We just need to hold on. But holding investments is always predicated on an idea of something's intrinsic value. If something doesn't have an intrinsic value, then you don't know what the right price is. And so although we have seen this before, I imagine it's pretty scary for investors if they bought in much higher up.
Sure. And then just finally, I mean, what are the dangers here? What's your message regarding crypto and buying in?
Well, I think with any investment, it's really important to firstly take a long-term perspective. And so the last few months in cryptocurrency have shown us that trading or jumping in and out at the wrong time can be really harmful. So firstly, take that long-term view. Secondly, know why you own something. Know what its intrinsic value is. We've said for a long time with cryptocurrency that because it has no intrinsic value, the only reason it has any value at all is scarcity. And of course, while one particular cryptocurrency may be scarce, we've seen a huge number of cryptocurrencies launched over the last few years. So there's no scarcity in cryptocurrencies as a whole. And so it's very tough to come up with intrinsic value for cryptocurrency as a whole. And when you don't have an intrinsic value, that's when you have this huge price volatility, because it's primarily driven by sentiment. So if you own cryptocurrency, if you believe in cryptocurrency, then know why you own it and know what your long-term expectations are.
And thanks so much. For more on crypto and the dramatic price movements in the markets, check out morningstar.co.uk. Until next time, I've been Ollie Smith for Morningstar.